Joining us now is ARK Invest Director of Investment Analysis and Institutional Strategies, Tasha Keeney. Tesla is the #1 holding in ARK's flagship innovation fund, making up about 10% of the portfolio. Tasha, welcome. So Tesla's been cutting prices, global deliveries, missed expectations, but I suspect you're going to tell me that this miss is okay. Is it because people thought it was going to be a lot worse?
Yeah, I think there's a couple things. So one, we're hearing that the Cybertruck, slated for the end of November. I think people are happy with that. Tesla has continued to make progress cutting the price to produce vehicles, of course, which is very important for future sustainable gross margins. Although, of course, margins this quarter were impacted by the price cuts. What we're focused on is the long term. So I'm really excited to hear about their progress towards a future Robotaxi platform. Again, I think it'll be much more profitable than the electric vehicle business, and it'll totally change the business model. So I'm looking forward to hearing more about that.
I'm puzzled by that idea because if there's Robotaxis, I don't need to buy a car, right? And so I'm not sure how profitable that. How are you modeling that, and how soon do you need for it to arrive for it to make sense the way you're modeling it?
Yeah, so you may not need to buy a car. Basically, we think incremental car buyers might forgo that decision, especially if you're located in an urban area. But it'll be a fleet model. So Tesla already has this partnership and integration with Hertz. They talked a little about that in the letter. Some of the app integration that they're doing this quarter. But I think in the future, you could imagine that Hertz could be a potential company that maybe houses and maintains these vehicles for customers. Ultimately, the reason that we think robotaxis are so exciting is because ultimately they could be priced below current ride-hail prices. That'll expand the market for ride-hail as we know it today. And we think this could be very profitable. So our estimate for our 2027 price target, which is published, is that we think gross margins could be around 50%. So that's north of the around 20% that we're seeing today, of course, and that's really driven by the autonomy business. We think this will be a services business model where they're charged per mile, and they'll get very attractive margins on that business.
Okay, and of course that's 5 years out, to your point. But looking at the results here today, I mean, have margins bottomed? How are we going to know that margins have bottomed? And I ask that because we knew deliveries had missed already coming into this report. So the implication here potentially is that they're seeing softening demand even as they're cutting prices.
Yes, I mean, I think the auto market as a whole is not immune to the macro changes that we're seeing happening today. So I think it's, again, something that people somewhat expected going into this quarter. We've seen they're continuing to cut prices. But here's the big story, right? So EVs as a category, the prices are down like 20% year over year. That's really driven by Tesla. But now a Model 3 is cheaper than the average car in the US. That is huge. That sticker price difference is what consumers who are, the current auto buyers before we have robotaxis, and that's what consumers look for when they purchase a vehicle. So the total cost of ownership of an electric vehicle has been cheaper than a gas-powered car for some time, but that sticker price is what really changes, consumer purchasing decisions. So I think, EVs will continue to take share. The growth of electric vehicles will outpace that of gas-powered car platforms, and that's not changing. So that's what we're focused on, again, for this long-term picture for Tesla.
Yeah, you mentioned Cybertruck and the expectation that deliveries start happening here in the fourth quarter. I mean, Americans specifically love their trucks. How big could this market be for Tesla? Can they take share from the traditional ICE-powered pickup trucks?
I certainly think so. And again, I think it'll be driven by price and performance. We see that electric vehicles offer better performance for the price. They're bringing down sticker prices. We saw that in this past quarter that an early reservation Cybertruck was auctioned for $400,000. So, I mean, it's already a collector's item before it's even in consumers' hands. I think that gives you an idea of sort of the excitement that we see out there. But past that, we've looked at Google Trends data. We see that, the geographies in the U.S. that are, heavy truck buyers are very interested in the Cybertruck. I think that analysts are expecting, some analysts think that could be somewhat of a niche product. I don't think so. I think it could be huge. We're seeing Ford cut production shift at their F-150 Lightning line. I think that, I would be worried if I were Ford about this
Okay.
Cybertruck coming out.